Hey, what's up y'all? I had to go record this video because I've been seeing a lot of people, especially beginners, making the same costly mistakes when it comes to investing. So today, I'm giving you 11 investing mistakes that are keeping people broke. Whether you're just getting started or you've been dabbling for a while, pay attention. This could save you thousands. Mistake number 1. Don't buy just because I said so. Seriously, don't invest in a stock just because some YouTuber or I mentioned it. That's not investing. That's just gambling. You really need to do your own research. Don't be a lazy investor. Just because someone in a sharp suit or with tons of followers says to buy, it doesn't mean it's the right move for you. Moving on to mistake number 2. Create your own plan. What are your financial goals? Retirement, income, growth. You need a personalized plan for investing, not a copy-paste from someone else's spreadsheet. Write down your goals, risk tolerance, and strategy. This is your money we're talking about, not anyone else's. Your plan should reflect your unique situation, dreams, and timeline. Mistake number 3 is a biggie. Learn how to analyze stocks. If you're diving into individual stocks, you really need to get a grip on both the qualitative stuff like management and market position and the quantitative side, such as earnings and debt. If you don't even know what a 10Q is, hit pause on stock picking. Seriously? You wouldn't buy a car without checking under the hood, so why invest in a company without knowing its financials? Fourth on our list, if you don't understand it, don't invest in it. Stick to index funds and ETFs until you've built the knowledge. There's no shame in that. You don't have to pretend like you're Warren Buffett. It's better to admit what you do on it than to lose money on something you thought you understood. Remember, the market doesn't care about your ego. Number 5 is crucial. Learn the game. Read seriously. Read books. Read articles. Read earnings reports. Read something. If you want to get wealthy through investing, you need to educate yourself. Knowledge is power. And in the investing world, it can literally translate to dollars in your pocket. Don't skimp on this step, y'all. Mistake number 6. Not staying consistent. Dollar cost averaging works. Investing $100 a month for 10 years will beat trying to time the market. Don't panic and pull out just because the market drops. That's when most people miss the best days. Consistency is key in investing. It's not about timing the market. It's about time in the market. Lucky number 7. Only invest in what you understand. You don't need to invest in AI if you don't know what AI is. You work in energy? Cool. Maybe invest there. Stick with your circle of competence. That's your edge. Warren Buffett calls this staying within your circle of competence, and it's solid advice. You'll sleep better at night knowing you understand what you own. 8th on our list. Only risk what you can afford to lose. Don't invest the rent money. Don't put your emergency fund in the market. That's stress you don't need. Build a solid foundation first. Your investments should be money you won't need for at least 5 years. Anything less than that, and you're playing with fire. Now, I'm gonna throw in a bonus tip here because I care about y'all. Invest enough. Once your foundation is solid, do you want just do the 3% match and think you reset? Push yourself. I wish I had invested more earlier. Time is your biggest ally in investing, so make the most of it while you can. Mistake number 9. Not diversifying your portfolio. Don't just buy 2 stocks and call it a day. Think about sectors, asset types, and even your split between real estate and stocks. ETFs can help with this if you're new. Remember the old saying? Don't put all your eggs in one basket. It's because it's true. Coming in at number 10. Not understanding that losses are part of the game. You will lose money sometimes. It's normal. Even the pros lose. The goal is to minimize and manage risk. Not to avoid it altogether. You learn, adjust, and keep going. If you can't handle seeing your portfolio in the red sometimes, you might need to reassess your risk tolerance. And finally, mistake number 11. Don't panic. Panic leads to emotional decisions, and emotional decisions cost money. The market moves up and down, but over time, it goes up. Don't sell when it dips. That's when wealth gets destroyed. Take a deep breath, stick to your plan, and think long term. If this helped you out, smash that like button and share this with someone who's just starting out. Drop a comment below. What's the biggest investing mistake you've made or avoided? And if you want a one-on-one session, check out the link in the description. Listen, the you today is the one who's going to take care of the you tomorrow. Be smart. Be intentional. Peace and love. Until next time. Now, let's dive a little deeper into each of these mistakes. because understanding them fully can really make a difference in your investing journey. When I say don't buy just because someone told you to, I mean it. Think about it. Every investor has different goals, different risk tolerances, and different time. What works for me might be a disaster for you. Do your homework. Read the company's financial reports, understand their business model, and make sure it aligns with your investment strategy. Creating your own plan is about more than just picking stocks. It's about understanding your financial situation, setting realistic goals, and mapping out how you're going to get there. Are you saving for retirement? A down payment on a house? Your kids' college fund? Each of these goals might require a different approach. Learning to analyze stocks is a skill that takes time to develop, but it's worth it. Start with the basics. Understanding financial statements, key ratios, and industry trends. As you get more comfortable, you can dive into more complex analysis. Remember, the goal isn't to become an expert overnight, but to continuously improve your understanding. If you don't understand something, it's okay to sit it out. There's no shame in admitting you don't get how cryptocurrency works, or that you're not sure about the intricacies of options trading. Stick to what you know until you've had time to learn about these more complex investments. Reading is fundamental, folks. And I'm not just talking about skimming headlines or watching CNBC. Dig into books by investing legends, read annual reports, and stay up to date with financial news. The more you know, the better equipped you'll be to make informed decisions. Consistency in investing is like consistency in working out. It's where the real gains happen. Set up automatic investments if you can. This way, you're investing whether the market is up or down, which can help smooth out your returns over time. Investing in what you understand gives you an edge. If you work in tech, you might have insights into which companies are innovating and which are falling behind. Use that knowledge to your advantage. Just remember to still do your due diligence and not let personal bias cloud your judgment. Only risking what you can afford to lose is crucial for your financial and mental well-being. Investing should help you sleep at night, not keep you up worrying. Make sure you have a solid emergency fund and your basic needs are covered before you start investing heavily. Diversification is your safety net. It doesn't guarantee you won't lose money, but it can help mitigate your risk. Think of it like a balanced diet. You need a little bit of everything to stay healthy. Understanding that losses are part of the game is key to maintaining your sanity as an investor. Even the best investors in the world have losing trades. What sets them apart is how they handle those losses and learn from them. And finally, don't panic. The stock market has historically gone up over the long term, despite short-term fluctuations. When you see your portfolio dropping, take a step back, review your strategy, and ask yourself if anything has fundamentally changed about the companies you've invested in. If not, it might just be time to hold steady or even buy more at a discount. Remember, investing is a marathon, not a sprint. It's about building wealth over time.
Let me ask you something. Have you ever felt like no matter how much money you make, you still feel like it's not enough? Or maybe you've caught yourself thinking things like, I'll never be good with money. Or, people like me just don't get rich. If you've ever had those thoughts, you're not alone. But here's the truth. It's not just about how much you earn. It's about how you think about money. Today, we're going to talk about something that most people never get taught, your money mindset, and how your thoughts, beliefs, and habits around money might be quietly shaping your entire financial life without you even realizing it. So if you're ready to shift your relationship with money, this video is for you. Let's start with something we don't talk about enough: your perception of money. What comes to mind when you hear the word money? Do you feel anxious, excited, stressed, guilty? Our thoughts about money often come from what we saw and heard growing up. Maybe you heard money doesn't grow on trees, or rich people are greedy, or we can't afford that. These phrases don't just pass through us. They stick, and over time, they shape the way we act with money. If you grew up watching your parents argue about bills, you might connect money to stress. If money was always scarce, you might feel guilty spending it, or go the other way and overspend as soon as you get some. So, it's important to ask, what stories did I learn about money, and are they helping or hurting me today? Money isn't just about numbers, it's about emotions too. Think about it. Why do we spend when we're sad? Why do we avoid looking at our bank account when we know it's low? Why do we celebrate with money or punish ourselves with it? Because money is emotional. It touches almost every part of our lives. Our relationships, our careers, our self-worth. So if you're struggling financially, it doesn't always mean you're lazy or bad at math. It could mean your money habits are being run by unconscious emotions. Now, let's talk about something fun: your financial personality. Some of us are savers. We love watching the bank account grow. Some are spenders. We get joy from experiences and things. Some are investors. We think long-term and love watching our money work for us. And honestly, none of these types are bad. They all have strengths and weaknesses. The problem is when we don't recognize who we are, and we let our default behaviors run the show. So ask yourself, do I avoid budgeting because it feels overwhelming? Do I overspend when I'm stressed? Do I hoard money out of fear? Your habits tell a story. And when you start noticing them, you get your power back. Let's get into the real work, changing what's not working. First, we need to challenge those limiting beliefs about money. Things like, I'm just not a money person. I'll always live paycheck to paycheck. Money is evil. None of that is facts. It's just mental programming you picked up somewhere. And the great thing about beliefs is you can change them. Start replacing those thoughts with ones like, I'm learning how to manage money better. Every dollar I earn is a tool, not a burden. I deserve financial peace. That shift in thinking, that's where transformation begins. And it's not just about mindset, it's also about action. That means learning the basics: how to budget, how to save, how to invest, how to use credit wisely. That's financial literacy, and it's your ticket to long-term stability. You don't have to master it overnight, but the more you learn, the more confident you'll feel. Let's talk about building a sustainable financial future, not just surviving month to month, but actually setting goals that give your money direction. Ask yourself, what am I working toward financially? Do I want freedom, travel, a home, less stress? Once you have goals, you can build a plan. Even a simple one, like saving $100 a month or paying off one debt, gives your money purpose. You can even use apps and tools to make things easier. Set up automated savings. Use budgeting tools like Yanab or Mint. Let technology help you stay consistent even when life gets busy. Now, let us talk about something that doesn't get enough attention: having a healthy relationship with money. Be mindful, not fearful. Be curious, not judgmental. And most importantly, celebrate your progress. Maybe you paid off a small debt. Maybe you said no to a purchase you didn't need. Maybe you just finally opened a savings account. Every step matters. Every small win is proof that you're moving in the right direction. So, here's the big picture. Fixing your finances isn't just about earning more. It's about thinking differently. It's about treating money with purpose, not fear. And it's about realizing that you are capable of more than you've been told. Start by shifting your mindset. Learn the basics, track your habits, and keep showing up, especially on the days it feels hard. Because financial freedom isn't just for other people. It's for you too. If this video helped you see money in a new way, let me know in the comments. What's one belief about money that you're ready to let go of? Don't forget to like this video, subscribe, and share it with someone who needs a mindset shift too. You've got this, and your future self, they'll thank you